Welcome to The Explainer. Sometimes in the crypto market, you see something really strange. And that's exactly what we're digging into today. A massive, high-stakes tug-of-war that has basically locked a major digital currency completely in place. It's a real puzzle.
So what's going on here? The question on everyone's mind is, why is Bitcoin Cash just stuck at 600 bucks? For days now, the price of BCH has been going completely sideways. It just can't seem to break out or break down. But here's the thing. What looks like a boring flat line is actually a sign of some seriously intense, balanced pressure. So let's call this what it is, the $600 stalemate. We're going to take a look at the forces that are creating this perfect, almost eerie balance in the market. See, this isn't just random chance. It's a market in total equilibrium, held in place by some really powerful opposing forces. Think of it like a financial standoff. The real key here is figuring out who's pulling on either side of that rope.
Okay, let's get into the numbers. The data really tells the story here. You can see the market is in this perfect, delicate balance. Take a look at the RSI, the Relative Strength Index. It's sitting right there in the middle. That basically means neither the buyers nor the sellers have the upper hand. But then, look at the open interest. It's up a whopping 23%. That tells us that big money, the institutional players, are heavily positioned right at this level. So what you get is this super strong floor at 600 bucks, but also this really tough ceiling of sellers waiting up around 660.
So that brings up a huge question, right? If everything's so perfectly balanced, who on earth has the power to keep it that way? Well, this is where we need to talk about the unseen players who are really dominating this market, the ones setting the price. Let's talk about the crypto whales.
Now, when we say whale, we're not talking about your average trader buying a little crypto here and there. No way. These are the financial heavyweights. We're talking about individuals or maybe even huge funds that are moving millions, sometimes even hundreds of millions of dollars. They have enough capital to literally create their own price floors or ceilings all by themselves.
And this chart, wow, it just perfectly illustrates how much power we're talking about. I mean, look at this concentration. A tiny group of just 176 wallets, that's that first slice, controls almost a quarter of the entire Bitcoin Cash supply. That is insane. You add in that next tier, and you've got a small fraction of holders controlling nearly 40% of the whole asset. Just think about that. Their coordinated moves can just completely overwhelm millions of smaller players in the market.
So here's the main takeaway, and it's a big one. What we're seeing here isn't a normal market driven by everyday investors. Nope, we are watching a battlefield. And on this battlefield, the price is being dictated almost entirely by the strategic moves of these incredibly deep-pocketed players. It's their game, and everyone else is just living in it. Okay, so this brings us to the whales playbook. What exactly is their game plan? Why are they so dead set on defending this $600 level? Let's peel back the layers and see what's really going on.
It's actually a pretty clever multi-step strategy. Step 1, establish a price floor. They're basically drawing a line in the sand at that $580 to $595 band. Step 2, they just absorb all the selling pressure. They act like a giant sponge, using their huge stacks of cash to buy up every coin that smaller sellers are offloading. It's all about strategic positioning, right? They're getting ready for their next big move, which seems to be tied to some recent protocol upgrades that have got other big players interested again.
All right, let's follow the money, because this is where it gets really interesting. This isn't just us guessing what they're doing. We can actually see the proof, the hard evidence, by looking directly at the transactions happening on the blockchain itself.
Case in point, check this out. We saw a single whale, one of those smart money players, open a long position worth $95.81 million. That is an enormous bet that the price is about to go up, not down.
And get this, they didn't just bet big. They used 3x leverage. That means they tripled the size of their bet. That is just an incredible, almost audacious show of confidence. It's a power move. It's not just about making a profit. It's about sending a signal to the entire market, screaming, "We are defending this level, don't even try it."
So why does one trade matter so much? Well, because this particular whale has a 95% success rate on their trades. That's a documented fact. So when a trader with that kind of Midas touch makes a move this huge, believe me, the rest of the market stops what they're doing and pays very, very close attention.
And it's not just about brute force. Other whales are using some really sophisticated tactics. There's one we're tracking, nicknamed Lightning Counterattack. Cool name, right? They're using a strategy called leveling. They add a few more million, like $6.5 million in this case, just to slightly lower their average buy-in price. It's a super subtle but smart move. It means they can stay profitable even if the price does absolutely nothing.
So where does this all lead? We've got these massive price walls, these crazy leveraged bets, this strategic accumulation. It's all boiling down to a massive conflict, a final tug of war that's playing out right now. And it's all about who's going to win and what you need to watch for next.
And it really is a classic tug of war. On one side of the rope, you have the whales. They're pulling the price up. They're accumulating, putting in that steady stream of buy orders and gobbling up every single dip. But on the other side, you have the smaller, long-term retail holders. The market calls them shrimp, and they're selling off their coins, which creates all the downward pressure that the whales are soaking up.
Okay, so this is what you need to keep your eyes on. These are the key levels, the battle lines. That $590 to $600 zone, that is the whale's line of defense. If that breaks, look out below, because the next major support is way down at 518. But if the whales win this fight and smash through that resistance at 660, we could see a really powerful breakout, maybe all the way up to 720. These are the numbers that are going to tell us who's really winning this thing.
And that really leaves us with the million-dollar question, doesn't it? This stalemate, it can't last forever. Something's got to give. So when that rope finally snaps, who's going to be left standing? Is it going to be the powerful, hyper-strategic whales, or the massive but totally uncoordinated army of retail shrimp?
Hey, if you enjoyed digging into this market mystery with us and found this whole breakdown valuable, do us a huge favor and hit that like button. And make sure you subscribe because it really helps us make more deep dive explainers just like this one. Thanks so much for watching.